And now for a further check on the markets, we've got joining us in our studio Ajay Argal. He's of course joining us from Birla Sun Life. And Ajay, thanks so much for being with us. All the views coming in so far, we closed above 17,000 yesterday and still no word of caution. Everyone continues to be extremely bullish on the Indian markets. And are you part of that brigade?
We are bullish from a long-term perspective. Definitely the markets are looking very good because we are in the upgrade cycle. We think that from now on for the next few quarters we are going to see earnings growth in strong double digits, which are going to drive the markets up. And it depends on the global markets. Of course, the global markets should be stable, the risk appetite should continue, so that the global investors look for growth, and once any investor is looking for growth, there is no way he can ignore India. So from that perspective we are positive from a longer term 12 to 18 month investment horizon.
Alright, and what particular sectors are you looking at? I notice you're very bullish in particular on the IT space, but to what extent do you actually see an upside there? Because a lot of those counters have already sort of reached, a particular level for now. Earnings have also been pretty subdued. Where do you see the growth coming from?
Actually, we were bullish on the IT sector. Right now we are slightly underweight on the IT sector. We were ahead of the game and had increased our positions 4 months back when most of the market was negative. And we thought that most of the negatives were in the price at that point in time, and we increased our positions. We were overweight. Currently we are underweight primarily because of the stock prices which have run up. So the large caps we think have done enough for the time being. We are more positive on the mid cap space in the IT sector. The reason being the business conditions have improved tremendously. We are seeing a lot of growth coming into the next few quarters, and whenever that happens the discount of the mid caps to the large caps reduce, and that's why we are more positive on the mid caps within the IT space.
Ajay, good morning. Neeraj also joining in straight ahead. Just wondering, what's your view on, the call that we've gotten from some quarters of the market is that if commodities indeed do correct, the way the dollar is playing right now, and if we see a rebound in that could be a bit negative for the equity markets in the short term. You think that's a factor at all?
We have seen correlation as you are mentioning. Whenever the dollar is strong, the global equity markets remain soft, and also the emerging markets like India. So some kind of correlation is definitely there, but it's a short-term phenomena, and also longer term the investors do look at the fundamentals, which is basically the earnings profile, the earnings growth. And as I mentioned some time back, the earnings growth is going to continue in India. From now on we think that the worst quarter is behind us, which was this quarter in terms of the earnings growth. And as the earnings growth improve, and if the global markets and the global credit conditions remain stable, the investors will come to India looking for growth.
Give us a sense, Ajay, about how are you viewing the commodity pocket? You can't paint it with the same brush, but most people are talking about commodities being overbought. Is it time to get cautious on the commodity stocks in particular, or there would still be some plays which would be available in the market right now?
There are always plays available in the commodity space, especially because the commodities is typically a trading sector, and you have to be kind of having a short-term perspective and do get in and get out at a quick speed. That's what the commodity sector is, and we have seen that the cycles in the commodity sector as far as the stock prices are concerned is getting compressed all the time. Because we are seeing huge swings in the demand scenario. Last year there was a big drop, and then there was a good pickup primarily because of Chinese buying, and due to this very nature the commodity sector will always remain a trading kind of sector. So you have to be on your toes in this sector. You cannot hold it for the long term, and you need to keep trading.
But Ajay, what would you look at in the commodity space? People have spoken that steel probably seems a bit nervous at this point of time. Any sector specific themes that you're looking at, either with a perspective of going long or with a perspective of booking profits?
We continuously keep doing that, and we think that be it the steel sector or the non-ferrous metals, if we are able to make 15-20% gains in a short period of time, then it's better to book those profits and look at some of the other stocks within the sector, or some other sector, because the global situation has not improved so much that we are going to see a long-term trend in the metal prices, be it steel or be it non-ferrous.
Let's bring up the auto pack, because that's starting to see a bit of an up move as well this morning. Talking about auto, Ajay, it really, that particular space really surprised everyone in the kind of way it moved over the last few months and out of that recessionary period. You feel any risk, however, to that growth prospects, considering that there may be a chance of rates being hiked early next year?
No, we don't think so. We think that the rates will be hiked pretty gradually. And more than the rates, it's the availability. The availability of finance has definitely improved. Just today's newspapers do carry one of the largest banks looking at increasing their exposure to the automobile financing. So we think that the availability of finance has improved tremendously. Also, if you look at the base which was formed in the second half of last year was very low. So we are going to see good growth even going forward within the automobile space, and especially in the four-wheeler space. So we remain very, very positive on the automobile space, and we were positive for the last 4 months. We continue to remain positive.
All right, in the telecom space, you mentioned you recommend trimming positions on telecom, but not getting out of that space altogether.
Yeah, that's true, because we think that telecom sector is like an infrastructure sector, and it is required in the economy. We have very strong companies there, but it's just that the competitive intensity has increased tremendously, and whenever that happens, there will be a short-term pressure on the profitability, and as a result the stocks tend to underperform the broader markets. And we have reduced our position in telecom space for that very reason, though we had been positive on this sector for the last so many years.
Right.
But we think that the competitive intensity, especially in the short term, will be very intense.
Ajay, thanks so much for joining us with all your views. Another extremely bullish outlook coming in there for the Indian markets. Let's now take a look at the big counter we're all going to be watching out for today, and that is, of course, Reliance Industries. A big